Good morning, it's Jeffrey Christian. It's a little bit after 10 o'clock on June 10th in New York City, CPM Group. I'm going to talk a little bit about gold and silver prices, our short-term and our shorter-term expectations in light of today's release of the May U.S. Consumer Price Index inflation data. The May data came in stronger than many people had expected. We, CPM Group and many others, had expected higher CPI than had been previously anticipated because of the high oil prices that we've seen over the last several weeks and the further increases in oil prices. They're up to about $122 a barrel for West Texas and $123 for Brent as of this morning. So the higher oil prices had sort of tipped that the CPI figures would probably be higher in May, and they were. You can see here on the month-to-month change, which is really the better way to look at what's really granularly happening in terms of inflation. We had a 1% increase in the headline inflation figure in May. So that was there. CPI was high. More worrisome, well, I'll get to that in a second. Here's the year-over-year data, which a lot of people look at, and headline inflation was 8.6%. You saw very sharp increases in energy, but also other things. And then the core inflation, which excludes the more volatile food and energy, was actually off a little bit in terms of the increase, but still very high at 6%. But you can see that this year-over-year data, really in April and May, has started to come down the way we've explained it was likely to do over the course of the second and third quarters of this year, second, third, and fourth quarters of this year. So we're starting to see that trend in core inflation, but the increase in oil prices, it has offset that in this. You probably can't see this data because it's kind of blurry. It's available for free at bls.gov, the Bureau of Labor Statistics, which compiles the surveys of thousands of US consumers. What did you actually buy last month and what did you pay for it, which is where the CPI comes from. It's not some drug-induced thing with heuristic ideals that the gold spammers want you to believe. The aspect is that every sector of the economy, the price index, every sector of the price index saw increased prices in May, both month to month and year over year. There were no weak segments in the economy in terms of sellers' pricing power. That is more worrisome than the headline inflation rising based on the oil prices, because it suggests a much more persistent inflation. You do see the core inflation coming off slowly, but it's still at 6%. Now, the immediate effects on gold and silver prices were that very interesting. Gold and silver had actually already fallen to CPM Group's shorter term trade recommendation targets. We had said a week or so ago that we thought that gold could get down to 1840 and silver to 2140 over the course of this week. And they had fallen to those levels before the CPI came out this morning. CPM Group was planning to issue new short-term buy trade recommendations on both metals this morning, thinking that over the next week, the gold price and silver prices could rise a little bit more. We wanted to wait and see what the CPI data said. When the CPI data was released, gold plunged to 1826.50 and silver plunged to 2123.50. So we saw an immediate sharp drop in gold and oil prices, gold and silver prices, due to higher than expected inflation figures. Clearly, the markets were saying these higher inflation figures suggest tighter monetary policy, higher interest rates, more interest rates hikes, stronger interest rate hikes, and more of the Fed reducing its bond portfolio and sucking excess cash out of the market. Interesting. In a couple of minutes, gold and silver had actually bounced back to higher levels than they had been prior to the BLS release. And since then, they've been subsequently showing some renewed weakness, again, focusing primarily on the idea of interest rates. Financial markets clearly interpreted the stronger inflation figures as being suggestive that the Fed will be more aggressive in increasing interest rates and reducing the amount of cash in circulation. That means is interesting. On a short-term basis, over the next 3 months, CPM Group expects gold and silver prices to weaken. We released our precious metals advisory yesterday, Thursday, the 9th of June. And in that, we talk about the various factors, including rising interest rates and seasonal weakness in fabrication demand, and other issues that we think will cause gold and silver prices to weaken over the next 1 to 3 months. Not a lot, as we've said in previous things, but there is scope for some further weakening in gold and silver prices. One of the things that we talk about in the precious metals advisory is the whole issue of the Fed policy. The markets have baked in the idea of 0.5% increases in U.S. Fed funds rates in the next 2 Fed meetings. And then the question now that the market is focusing on is, will they increase rates another 50 basis points in September? Or will they reduce the increase? Or will they hold their fire while they assess where the market and the economy are in September? And that's going to be the big issue over the next 3 or 4 months. And that is really going to heavily weigh on gold and silver prices. What will the Fed be doing with interest rates? It's been an issue forever, really, but it's been front and center at least since the beginning of this year. That's our what we call short-term view, the next 3 months. Our shorter-term view, which we express through the trade recommendations, is that the gold and silver prices might recover some over the course of the next week. And we're not looking for prices to run away on the upside, but we wouldn't be surprised to see somewhat higher gold and silver prices over the next week, compounded or it's challenged by the fact that the May producer price index will be released on Tuesday, and it also will probably show greater strength in price increases than had been previously anticipated due to the high oil prices. And oil prices obviously filter through every segment of the economy because most goods get distributed either by diesel locomotives or trucks. So that's going to be a factor. So from a really short-term view, the next week or so, we wouldn't be surprised to see gold and silver prices recover some. Not a lot, but some. And from a perspective of the next 3 months, we continue to expect to see price weakness. Obviously, this is all subject to changes in the economic environment, the financial environment, and the political environment. Politics will be important to pay attention to, not over the next 3 months, but over the next 6 months or so. The United States is fiercely challenged in a political way. You have political problems in Europe and other parts of the world. And then you have international problems, including the Russian invasion of Ukraine, which continues. So those factors could change these things. But as we sit here today, looking at the way the markets reacted to the PPI, the CPI release, we think that the prices could come back a little bit next week, but then probably go weaken somewhat during the summer months. That's all we have for this week. I do want to say, we did yesterday, in addition to the precious metals advisory, which is available from CPM Group. You can order it at our website or through via info@cpmgroup.com. We also did our second annual Silver Facts and Fantasies video, open presentation and Q&A yesterday. It will be posted on YouTube next week. We're shooting for next Tuesday. We are going to be at the Prospectors and Developers Association of Canada next week. And in conjunction with that, we have done the Facts and Fantasies last year when the PDAC was virtual. And we have done it again this year. We have had a reception at the PDAC, a silver reception for 18 years. This will be our 18th year, 17 years we've done it. This will be our 18th. And we always come up with a little booklet called Silver to hand out to people who come to that reception. That booklet, we've changed the title from Silver to Silver Truths. It basically will reflect and mirror the content of Silver Facts and Fantasies, the online seminar that we did yesterday. We hope to release both of them next Tuesday if our scheduling at the PDAC allows. Anyone who attended the presentation online yesterday will get the report automatically. Others who want that report will have to ask for it, and you'll ask for it at info@cpmgroup.com. That's all I have for now. Have a good weekend, and we will talk to you down the road.